Think about this for a moment. You've spent years building equity in your Florida home. You've done everything right, paid your mortgage, maintained the property, maybe even upgraded the roof. And then, in a matter of hours, one major hurricane makes landfall. And just like that, your insurance costs go up, your property value becomes uncertain, and suddenly buyers in your neighborhood start to hesitate. That's not a worst-case scenario. That's something Florida has lived through before. And with the 2026 Atlantic hurricane season now less than 100 days away, this is exactly the right time to understand what that risk actually means for your home, your finances, and your long-term plans, especially if you're a retiree, a first-time buyer, or someone thinking about selling. Today, we're going to walk through the real picture: hurricane risk, insurance costs, property values, and what the market looks like heading into this season. No exaggeration, just what you need to know. June 1st is the official start of the 2026 Atlantic hurricane season. And right now, as of late February, we are within 100 days of that date. That might sound like plenty of time, but for homeowners, real estate professionals, and anyone making a financial decision tied to Florida property, this preseason window is actually one of the most important periods of the year. Here's why. The decisions people make right now, whether to buy, whether to sell, whether to renew an insurance policy, or shop for a new one, all of those happen before the first storm forms. By the time a named storm is approaching Florida, it's too late to change your coverage, too late to renegotiate your mortgage terms, and in many cases, too late to get the best value out of a transaction. Florida is uniquely exposed when it comes to hurricane risk. The state sits in the path of Atlantic storms that form off the coast of Africa, travel across warm open water, and gain strength before making landfall on the Gulf or Atlantic coast. The geography doesn't change. What does change year to year is how prepared the market is, how insurance companies are positioned, how many carriers are writing policies, and how buyers and sellers are factoring in this risk into their decisions. So consider this your 100-day heads up, not to create anxiety, but to give you enough time to make informed choices. Now here's something that's actually worth acknowledging as a positive development. Florida's home insurance market, which has been under serious strain over the last several years, is starting to show signs of stabilization in early 2026. After years of insurance companies pulling out of the state, sky-high premiums, and some homeowners being left with no options, the Florida legislature passed a series of reforms specifically aimed at reducing the conditions that were driving those problems. Chief among them was litigation abuse. Florida had become one of the most litigated insurance markets in the country, and that was driving up costs across the board. Those reforms have started to have an effect. Some carriers that had previously left Florida are now returning. A few companies have even announced modest rate reductions and are offering more competitive policies than what we saw 2 or 3 years ago. This is meaningful. For years, the conversation around Florida insurance was almost entirely one direction: costs going up, options going down. The fact that we're even talking about stabilization is a sign that the reforms are working to some degree. But this is important to understand. Stabilization is not the same as affordability. Premiums are still historically high. The market is better than it was. It is not yet where many homeowners need it to be. So if reforms are working and carriers are returning, why are premiums still so high? It's a fair question, and the answer comes down to a few things that don't go away overnight. First, there's climate risk. The frequency and intensity of severe weather events across Florida, not just major hurricanes, but severe thunderstorms, flooding, and wind damage, has increased over time. Insurance companies model that risk carefully, and right now that modeling shows elevated exposure. When the underlying risk goes up, premiums reflect that. Second, there's the cost of reinsurance. Reinsurance is essentially insurance for insurance companies. It's what allows carriers to take on policies without assuming unlimited financial liability. The reinsurance market globally has been tightening, which means insurance companies are paying more to protect themselves, and that cost gets passed down to policyholders. And third, there's the damage baseline. After Hurricane Ian in 2022 caused more than $100 billion in damage, the industry had to recalibrate. Claims costs were enormous. That kind of event resets expectations, both for what losses can look like and for how premiums need to be priced going forward. The result is that even with reforms and some market improvement, Florida homeowners are still paying some of the highest premiums in the country. For many people, insurance is now their single largest ongoing homeownership cost after the mortgage itself. Let's talk about what this actually means for real estate, because the connection between hurricane risk and property values is more nuanced than people often expect. In the short term, Florida's housing market has shown remarkable resilience. Even after major storms, prices in many areas have recovered, sometimes quickly. But when you look at specific coastal zones, especially those with repeated flood risk or limited insurance options, the picture is more complicated. Long-term hurricane risk is increasingly being priced into home values. Some coastal properties that 10 years ago carried strong appreciation potential are now seeing softer demand, partly because buyers are running the numbers and realizing that insurance costs alone can make the total cost of ownership unsustainable. The condo market deserves its own mention here because Florida condos are in a particularly sensitive position right now. Following the Surfside collapse in 2021, Florida passed legislation requiring more rigorous structural inspections and reserve funding for older condo buildings. Many associations are now facing significant special assessments to meet those requirements. And the combination of higher HOA fees, insurance costs, and special assessments has made some condo units genuinely difficult to sell. If you own a condo in Florida or you're thinking about buying one, you need to understand the full financial picture, not just the listing price, but the monthly fees, the reserve fund status, and what the insurance situation looks like for that specific building. There's also a mortgage dimension that doesn't always get discussed. Lenders are increasingly factoring insurance costs and climate risk into underwriting decisions. If a property is in a high-risk flood zone and insurance is either unavailable or extremely expensive, that can affect a buyer's ability to get financing, or it can change the terms they're offered. This is not hypothetical. Mortgage professionals in Florida are navigating this in real transactions right now. As hurricane season approaches, buyer behavior also tends to shift. People become more cautious, more aware of risk, and in some cases, they delay decisions. We often see real estate activity in Florida slow slightly in the months before and during peak hurricane season. That seasonal pattern is normal. But in a year where the market is already navigating high interest rates and affordability pressures, that natural hesitation can have a bigger impact than usual. And then there are retirees on fixed income. And this is where things get particularly difficult. Florida has long been one of the top retirement destinations in the country. But when insurance premiums rise by several $1,000s a year and there's no corresponding increase in Social Security or pension income, that gap has to come from somewhere. We've seen retirees making real sacrifices, deferring home maintenance, skipping coverage options, or in some cases, seriously considering whether to sell and relocate somewhere with lower carrying costs. That's a hard conversation, and it's one that's happening in communities across the state. Let's take a step back and talk about reinsurance because it's one of those things that happens behind the scenes but has a direct impact on what you pay for home insurance. Reinsurance is how insurance companies manage their own financial exposure. When a carrier writes thousands of policies across Florida, they can't absorb unlimited losses if a major storm hits. So they purchase reinsurance. They pay other companies to take on a portion of that risk. The cost of that reinsurance is factored into the premiums they charge to homeowners. In recent years, reinsurance costs globally have been elevated due to a series of high-cost weather events, not just in Florida, but across the Gulf Coast, in Europe, and elsewhere. That global pressure has fed directly into Florida's insurance market. However, there are signs that reinsurance costs may ease somewhat in 2026. Citizens Property Insurance, Florida's state-backed insurer of last resort, has projected that its reinsurance costs could be lower this year due to exposure reduction. The policy depopulation efforts that have moved many Citizens customers to private carriers. If reinsurance costs do soften, that creates the conditions for insurance premiums to eventually follow. But the timeline for that to reach individual homeowners is not immediate. These are structural market shifts that take time to work through the system. It would be easy to frame this entire conversation as doom and gloom, but that's not an accurate picture of where things stand. Florida's real estate market is complicated right now. There are real pressures, but there are also real reasons for measured optimism. On the positive side, the insurance reforms are working in a meaningful direction. More carriers are in the market. Competition is returning, at least in some areas. The pace of premium increases has slowed, and the overall Florida housing market, while it has cooled from its peak, remains one of the most in demand in the country, driven by continued population growth, a strong job market, and people relocating from higher-cost states. On the risk side, hurricane season is real, and one significant storm can change the conversation quickly, not just in terms of physical damage, but in terms of market sentiment, insurance availability, and how buyers and investors perceive the state. Florida has come back from storms before, and it will again. But there is a cost to that recovery, and it is not always evenly distributed. The people who tend to fare best in this kind of environment are the ones who plan ahead, who understand their insurance coverage before a storm forms, who know their flood zone status, who have looked at the total cost of homeownership, not just the purchase price, and who are making decisions based on real information, not panic and not denial. So let's end with a question that's probably in the back of your mind. What happens to Florida real estate if a major storm makes landfall this season? The honest answer is, it depends. It depends on where the storm hits, how strong it is, what the damage looks like, and how prepared the insurance market is to respond. Florida has absorbed major hurricanes before, and the housing market has recovered. That's a real track record. But the financial pressure on homeowners in a post-storm environment is real and immediate. Claims processing can be slow. Temporary housing is expensive. And in areas where damage is widespread, the combination of insurance disputes, construction backlogs, and market uncertainty can drag on for years. We saw that after Ian, and we saw versions of it after Irma and Michael. If a major storm hits Florida this year, the people who will feel the most acute financial strain are those who are underinsured, those on fixed income with limited savings, and those in the middle of a real estate transaction when the storm arrives. That's exactly why the next 100 days matter so much. Not because a storm is certain, we don't know that, but because preparation is something you do before you need it. If you own a home in Florida, review your coverage. Understand what it includes and what it doesn't. Know your deductibles. Know your flood zone. And if you're buying or selling, factor the full cost picture into your decision, not just the number on the listing. Florida is still a tremendous place to live and invest. The state has grown through challenges before, and it will continue to. But the market rewards the people who go in with clear eyes and real information, and we hope this gives you both.